Welcome back everyone to the Cobra Trading Channel, where we focus on people, passion, and platforms. I'm Alex Bustos, and today we're going to be talking about short squeezes. What are they and how do they happen? A short squeeze is when there's a ton of short sellers who are in a stock and they think it's going to go down. However, a key level of that stock is broken to the upside where a lot of stops are sitting, or mental stops where short sellers are watching and saying, if it breaks above this price, I got to get out because I'm wrong. And when that happens, you have all of these short sellers, tons of them, buying to cover, because you have to buy to get out when you sell short. But not only that, because if it was just that, yeah, it'd go a little high. However, you also have the normal buyers who are buying it as well. They're not shorting, they're buying it because maybe that key level is important to them as well. Maybe it's a breakout on the chart. So if you have a key level that is a breakout on the big picture, and you know there's a lot of people shorting it, and you know that it's important to buyers to buy breakouts, if you couple those together, you can have a recipe for a massive short squeeze that just squeezes everyone and just skyrockets to the moon and then fails later. Now, why do these happen? These typically happen because short sellers start to get very confident. And if you see a stock that is fading and just keeps on failing and failing and failing, then sometimes those could be part of the recipe for a potential short squeeze. Nothing is guaranteed in trading because there's plenty of opportunities where you might see an area that's important and there's no squeeze that happens at all. Because you have to make sure that this stock also has the buyer's interests. You need both parties involved. So if it's a stock that's kind of just like, doesn't really have a lot of momentum, a lot of volume, it may not do much. However, we just want you to understand these are very dangerous. So if you're shorting, because here at Cobra Trading, we have some of the best borrows and we take care of you short sellers, that if you're doing this, you better stick to your plan and cut your loss, because short squeezes can easily take a profitable trader and make him unprofitable, or not even a trader at all, because it can blow up your account. So you have to manage your risk appropriately. If you see key areas that could be a recipe for a short squeeze, you need to be aware of that and plan for it. Give yourself some wiggle room, something. Make sure that you're not caught in a bad situation. If you're a buyer and you're not shorting, that's fine, because you can use this to your advantage as well and be like, you know what, these areas are interesting because they may be a recipe for a short squeeze. And if they are, that shouldn't be the only reason you're buying it. Unless you have a ton of experience, please be careful. You still need a big picture on your side. You still need a setup. You need to make sure you stick to something that works for you, but know that short squeezes do exist. And so when you see something as a new trader just skyrocket, go analyze that. Go figure out, why did it do that? Is it possible there was a short squeeze? And if there was, after analyzing, maybe take a picture of that chart, and every time that happens, take pictures of it, or a mental picture, and over time, you can get familiar with what they look like. Now you have a better understanding of what short squeezes are and how to notice them and what you can do to prepare for them. So if you have any questions for any of us here at CobraTrading.com, feel free to reach out to us on our website, click the live chat feature, because we're always happy to help.